In the year 2009, the national debt of the United States has surged by nearly 35%. We now owe the world $12.4 trillion.
Pyramiding debt and credit expansion over the past 38 years has come to an abrupt end, as predicted by free market economists. Pursuing the same policy of excessive spending, debt expansion, and monetary inflation can only compound the problems and prevent the required corrections. Since the attack on the dollar will continue, I would suggest that the problems we have faced so far are nothing compared to what it will be like when the world not only rejects our debt, but our dollar as well. That's when we'll witness political turmoil, which will be to no one's benefit.
Every American, from newborn babies to the elderly, now owe over $40,000 to Communist China, Japan, Middle Eastern countries, the Russians, and others. And the Federal Reserve Bank, the largest private bank on earth, now owns over $5 trillion in debt. You owe them all. And because of recent U.S. policy changes, foreign nations are losing faith in our ability to recover. China sold off 2/3 of its treasury bills in 2009 and may stop buying our debt altogether. So what does all of this mean for you? It means that with the explosion in national debt, other nations will lose faith in the dollar, and it may become worth less as the rest of the world shifts to other, more reliable currencies, or a basket of currencies. It means that to keep pace with the massive spending and debt, we'll have to print more money, and that means it will be worthless. It means that even though you're earning interest on money you save or invest, you're still losing money because the value of your money is in decline. It means that there will be less investment in new businesses. It means fewer raises, fewer jobs, and less opportunity. It means a downward spiral and a return to days we thought we'd never see again. With the national debt skyrocketing and your investments and savings becoming worth less and less, you need to know that there are ways to weather the storm. Real assets that hold value over time are the key. Real estate has always been a solid investment, but in recent years even that has taken a dive. And even if real estate were holding its value, it's expensive and complicated. Many investors are moving toward precious metals like gold. The advantage to holding gold is that it's held its real value. That is, the amount of goods and services it can be exchanged for over time. Gold's value has always grown independently of the value of paper currencies and stocks. In fact, as our national debt piles up, more and more savvy investors will purchase gold, making it more rare and more valuable. Unlike other assets of real value, metals are inexpensive to get started in, and they're very easy to liquidate when it's time.